Do you know the three types of income and how they are taxed? That's the question we're going to explore today. We'll delve into the world of earned income, business income, and investment income, demystifying these complex terms and helping you understand where they come from. Earned income, the most familiar type, comes from the work you do. It's the pay you get for your time and effort. Business income, on the other hand, is generated from the operation of a business or trade. It's the revenue that comes in from selling products or services. Then we have investment income, which is a bit different. This income is generated from your investments in stocks, bonds, real estate, and other assets. Each of these income types come with their own unique tax implications, which we'll cover in detail. Understanding these types of income and their tax implications is crucial for financial planning and wealth management. So let's dive in. First, we delve into earned income, which is the most common type of income. Earned income springs from the sweat of your brow, so to speak. It's what you earn by trading your time and skills for money. This typically comes in the form of wages, salaries, tips, and other taxable employee pay. It's the paycheck you receive from your 9-to-5 job or the tips you make waiting tables. Now, how is this income taxed? Earned income is subject to various taxes. On the federal level, it falls under the purview of the IRS and is taxed according to the federal income tax brackets. Moreover, most states also tax earned income at varying rates. And let's not forget about Social Security and Medicare taxes, which are automatically deducted from your paycheck. So, earned income, while being the most straightforward form of income, is also the most heavily taxed. This is where financial savvy and strategic planning can make a significant difference. Next, we explore business income, a type of income that offers more flexibility and potential for growth. Business income is primarily generated from profits of a business you own. This could be a small mom-and-pop shop, a thriving online store, or even a massive corporation. The key is ownership. Now let's talk about taxes. Business income is usually taxed at the business level. This means the business itself pays the tax before any profits are distributed to owners. But in some cases, the income can be passed through to the owner's personal tax return. This is common in sole proprietorships and partnerships. However, it's important to note that while business income provides more opportunities for tax planning and wealth accumulation, it doesn't come without its challenges. There's more complexity involved in managing business finances, and the risk factor is significantly higher. Business income offers more potential for tax planning and wealth accumulation, but it also comes with more complexity and risk. Finally, we turn to investment income, a type of income that can provide ongoing returns and long-term growth. Investment income springs from three main sources. The first is dividends, which are a share of a company's profits distributed to its shareholders. The second is interest, earned from lending money, perhaps through bonds or a savings account. Lastly, there are capital gains, the profits earned when you sell an investment for more than you bought it for. Now let's chat about taxes. Investment income is generally taxed at lower rates than earned income. However, it's also subject to capital gains tax, which varies based on how long you've held the investment and your overall income level. The trick is to hold on to your investments long enough to qualify for long-term capital gains rates, which are typically lower. Investment income can be a powerful tool for wealth accumulation, but it requires careful planning and management to maximize its benefits. To sum up, we have explored the three types of income and their tax implications. We've learned that earned income comes from your job, business income from your own venture, and investment income from your assets. Each is taxed differently, making it essential for effective financial planning and wealth management. Understanding these categories can help you strategize, optimize your tax liabilities, and grow your wealth. With this knowledge, you can make more informed decisions about your income and taxes, and take a big step towards achieving your financial goals.